So, oh, sorry, I just just disrupted by something there.
Sorry, go for it.
So tax returns, I guess that's why you're all here, because we've only got a few days until the deadline in end of January, or you
Plenty
want
of
to
time.
learn for the next year maybe. So you're getting ahead of the game, which is what I'm hoping you are, rather than last minute panic. But
I promise to get more ahead of the game next year than I was this year.
there is a stat, I think like over 50% of tax returns were outstanding at the start of January, so it doesn't surprise me, to be honest. And I'm an accountant, I work in practice, and yeah, we deal with a lot of tax returns. We encourage our clients to be as punctual as they can, but we always get some last minute jobs. So
don't know what you're talking about.
Yeah, of course not, Simon. I'm not going to comment anyway. So who needs to submit a tax return by the 31st of January 2023? So I guess you're all aware of that deadline, and that's the deadline for tax returns to be submitted for the 21-22 tax year.
Right, so let's just pause on that for a second, Emma, because this is the bit that always used to bake my noodle, right? And that's a technical tax term. So so if you've started your business basically in 2021, you'd have started it it doesn't matter if it was in April, May, June, July, does it? But the tax year ends at the end of March 2022, and it's that year that people are reporting on in January, before the 31st of January this month, right? Is that that we're just making sure that we've got that right?
That's correct. So any income you earn, there's actually certain dates. It's not the end of March, but you can actually report it up to the end of March. So that's a little caveat that you might want to use. But it's actually between the 6th of April 2021 and the 5th of April 2022. And I've just put those dates in the chat. So that's the deadline for the 31st of January 2023. So if you earned any income that needs declaring in those periods of time, then you would need to submit a tax return and pay any tax before the end of this month. If you earn anything if you started after the 5th of April, I think somebody asked a question straight away on that, and they started in August 22, then you would need to do a tax return for the next year, and that's due next January. So you've got a bit more time. So yeah, this is just for anyone with income between the 6th of April 2021 and the 5th of April 2022.
Awesome.
In terms of who needs to do a tax return, so if you just have an employment and you're employed by an employer, and you get a pay slip every month, they will deduct the tax and national insurance and everything for you. You don't need to necessarily do a tax return unless you're a high earner over £100,000, which is unusual. Let's just say that. However, if you don't have an employer and you're self-employed, which I think a lot of you will be, then that's when you need to do a tax return, because you haven't yet paid any tax on that income or any national insurance. So that's what I guess we're going to cover now.
And just before we jump on to the next bit, I just want to clarify something. If you're somebody who's got a part-time job or even a full-time job, and then you've got a business that's on the side, you're self-employed, doing whatever it is that you do outside of a day job, we're only reporting on the money that's relation to your day job. Is that right, Em?
So what you'll have to do is you will have to still do a tax return, because you have income outside of your day job, your employed job. And when you come to do your tax return, it will ask you about your employed job as well as your self-employed job. So you'll have to enter the income figures and the tax figures from your employed job, which you'll normally get from a P60 at the end of the tax year. So you should all get a P60 if you're employed, or a P45 if you left the job partway through the tax year, because all of that income has to be reported on your tax return. So yeah, don't make this mistake of only putting your self-employed income on there if you did have an employment in the tax year, because HMRC will recognise that, and then they will reissue your tax return and make you pay more tax, because they have a record of all your employments on their system.
Perfect. Okay, so when people are reporting their tax, they need to make sure that they've got in the right box any information from the P60 about your employment, and then in a different box goes the information, which we'll talk a little bit more about, what the figure is and how you get to that number to tell HMRC what money you've made and so on.
Yeah, that's correct. So I guess we'll get on to what you put in those boxes in terms of the sole trade income. So if you are self-employed, you're a sole trader and you work for yourself. So you're receiving money in from your customers, and you're also kind of paying out expenses and other things relating to your business. So these are the things that you need to collate as a business. And I think we have a template spreadsheet that you can use to collate that information, but you just need to make sure you keep a list of all your ingoings and outgoings as a business. And HMRC will ask you for that when you complete your tax return online on the gateway. It will ask you to put in your income and your expenses. In terms of your income, it's fairly simple. It's just money you've earned in the year. So any cash you receive, any money you receive from your customers. So you invoice someone, they pay you, that's income. Any expenses is a bit more tricky because it's a minefield. There's so many different expenses you could claim for. The general rule is that where it's wholly and exclusively for the business, you can claim it. If there's a personal element, then you may not be able to claim the full cost. As an example, if you buy a laptop, you might use it 80% for the business, 20% personal. You could then only claim 80% of it. So those are kind of the things that can catch people out a little bit. But generally, if you're buying goods and you're selling them on, the cost of buying the goods would be a cost of the business because it's wholly for the business. Where it gets a little bit more tricky is we can probably dive down some of these rabbit holes, but in terms of the expenses that you incur day to day, where you might be able to claim a percentage of the costs, for example, where you work at home or your telephone, your broadband costs, you might be able to claim a percentage of them, but there's obviously a split between business and personal use. We can go into how to calculate that if you want to now. Oh, I think
I did that on purpose just to make sure everyone knew that I know how to use Zoom honestly. Just pause for a second. I just wanted to just pause on that bit about expenses. So imagine, let's just pick a number of, let's say that you've got £20,000 that you've earned this year. Yeah. Now, what happens at that moment is HMRC and the King look at that number and they go, "Ooh, it's an interesting number. It's a nice big number, juicy number. You now owe some tax on that." But what our job as business owners is to do is to, within the rules that they give us, is to reduce the profit figure. Because if we don't list any expenses, then they're looking to get tax on that full amount. So the whole point of making a record of your expenses and capturing that is that you can reduce, it's not £20,000 worth of profit, that's your £20,000 worth of sales, that's your income. The profit figure is we need to offset. Now, the reason I'm telling you that is I know some of you guys know this already, but I can't tell you the number of times that I've met people that miss the opportunity to claim for what you're entitled to claim for as a business expense. And then actually what happens is that £20,000 figure of sales becomes a profit figure of 12,000 or 10,000 or 9,000 or 14,000. So that we've got to make sure that we capture those expenses. We make a list of them. We've got all the receipts and the invoices from all the money that we've spent. I saw a question about CPD. I think just picking up on what Emma said, I like the duck test. You know, the duck test, if it looks like a duck and it walks like a duck, it's a duck. So if you go, "Oh, can I claim for that massage that was really important for me to have my health and well-being?" You go, unless of course that that is integral to your business, that maybe your your whole business is about doing reviews for massage therapists. I don't know why I'm talking about massage, maybe because I'm getting stressed. But the whole point of this, folks, and I'm going to stick a link in the chat here, just in case you haven't seen this. This is going to give you the list of things that you're entitled to claim for, so that the number that you put in the box that we'll talk more about in a minute is the smallest number within the rules that it can possibly be, because that means you'll pay less tax. That's the game. And the discipline to get over this a little bit more, folks, and get into it, the discipline to look after your money is what's going to set you free. It really is. And I can't tell you the times where I just thought, oh, I'll just work harder. And actually, that, understanding your expenses means you don't have to work so hard for the same amount of money. And that's what I wanted to give you as a gift.
So I think that there are a few areas where people ask the most questions. So maybe if we go into those. So I think some people in the chat have been asking about internet costs and what percentage of internet costs can I claim as a sole trader. So if you're a sole trader and you're working from home, then obviously you're using the internet for quite a lot of your work. What HMRC want to see is they just want to see some sort of rationale behind what percentage you've claimed. So if you're a builder and you're never working from home, you're out and about and you're not really using your home internet, then you're not really going to be able to claim much of a percentage, because you're only just going to be sat there doing a bit of invoicing or whatever in the evening. But obviously if you're working kind of 5 days a week, 8 hours a day using the internet, then potentially you could claim like 5/7 of the week of the internet, basically, because obviously the weekend you probably won't be working and you'll probably still be using the internet. So it really depends, but as long as you can justify what you've done based on what work you do, it's only ever going to be an estimate anyway. So what we do with our clients is we just say, can you kind of estimate what percentage of the time you spend on the internet for business versus personal use? And as long as it's reasonable and the trade makes sense, then I think you can claim whatever percentage from, like, I don't know, from 30% to 80% or 90%, it depends on your business, is what I'd say. So as Simon said, it's kind of just applying just a bit of a sense check. So they're not too, as long as you can prove it and you've got the bills and then you've got the kind of reason why you're claiming a percentage, then that's fine. For use of home, there's also, so someone's also mentioned electricity, gas, rent. So yes, you can do a similar calculation for your running costs of your home. These running costs could include your gas, your electricity, which has obviously gone up quite a lot recently. Your council,
I hadn't heard that. Has that
no, everything's going up, isn't it? Council tax. You can actually include your mortgage interest, but only the mortgage interest and not the capital repayment. So if you have a mortgage where you're paying off capital, you can only claim that, you can only put the mortgage interest into this calculation. So that's important. If you don't own your home, you could claim the rent instead in this calculation. So what you do is add up the total running costs of your home for the whole year. And then how you work out your percentage, the way we do it with our clients is we ask them how many rooms they have in the house. And these rooms are not kitchens or bathrooms, just plain old rooms. So say you have 4 rooms, you use one of the rooms for business. So you use a quarter of the house for business, but you're obviously not using that room 100% of the time for business. It might be like 80% of the time. So then you need to apply 80% of the costs and then apply a quarter again. So you've got 1 room out of 4 for 80% of the time. So it's a bit of a calculation that you've got to do. But it's worth doing, because obviously that will go against your profit, as Simon said, and it would reduce your tax bill. And as long as it's reasonable and you can justify why you're claiming 1 room out of 4 or 1%, or like I work at home like 50% of the time in that room, then as long as you can claim kind of, as long as you justify it, then that's fine.
And I think that was what we'll pick up a couple of questions about that specifically. So Joanna said, what are the percentages used? And I think you said 5/7. And I was like, that's a really odd fraction. I went, oh yeah, because there's 7 days in a week, aren't you? Because you're not working at the weekends. So there's some of those. It's like what I think what we need to apply is some kind of rationale. And I went through the same thing, by the way, with Amazon Prime. So I subscribed to Amazon Prime, and someone at Emma's team sent me a message to say, is that purely for the business? I was like, damn it, she's got me. It's not purely for the business. I do watch a few movies, but the reason I got Amazon Prime was so that I could get next day delivery on a bunch of stuff that I might need for work. So, but I've got some benefits from that as well. So I think it's like, that's what I mean by the duck test. Tassim's comment about CPD and about, and Danika's comment about creating a website for the business, that's 100% a business expense. If it's CPD, if your business is, let's say you're a carpenter and you've done a CPD course in Reiki healing, unless you're going to start a business in Reiki healing, you go like, doesn't really fit, does it? Sort of fails the duck test. So as long as you can show that the money that you're spending has directly relation to you doing what you need to do in your business, then it becomes a legitimate business expense. And the gray area is, well, if I've got a bit of personal gain from this as well as business gain, like the internet was a great example, then we might need to make an adjustment and just kind of bear that in mind. Like, it's not the full amount, is it? Because I use internet for home, but I work 5 days a week from home, hence the 5/7 in Emma's example.
Yeah, so I'd say on that, Simon, so there's a few things. Yeah, the 5/7 is because 5 days out of 7, but you could be like, right, I work this many hours in the week and work it out as an hour percentage. You don't have to follow a set rule as long as it makes sense. And
you just have some sort of sensible rationale.
Yeah, that's it. You could do it on floor space instead of rooms, potentially, if you've not got many rooms. So it just depends. You've just got to be able to justify it and come up with a figure. But yeah, most of our clients, if they're full-time at home, then the use of home claim can be quite a lot, because obviously costs are quite high. It depends if they've got a high mortgage or renting as well, because renting you can claim the full rent rather than just the interest on the mortgage. And yes, I think someone asked about council tax. You can put council tax in that calculation, so you would put it all in a calculation and then do a percentage of that total cost, and that's what you'd put as an expense. You wouldn't put the whole expense, you just put the percentage of that expense as a cost, if that makes sense. There was also something you mentioned, Simon, about training courses, and I just wanted that there is a bit of a clarification on that.
Go on, give me the give me the good news and the bad news. Come on, balance it up a little bit.
The good news is that you can claim training courses that relate to your trade if they are to refresh an existing trade. So you're a builder and you're just learning, you're going on a course learning about something you already know about, but you're just refreshing your knowledge. If you were like a builder and you decided to become a healer, you couldn't claim that, even if you are going on to earn income as a healer, like you said. So you can't learn a new skill. So if you're you can't claim training courses for learning a new skill, but you can for like any CPD, as you said, any kind of, like for an accountant, we have to do kind of ongoing courses. We could put those through if we're sold.
Oh, do you claim that back?
Yeah, so this is also, I want to also say that this is talking about sole traders and not limited companies. We have to make that clear, because I think a couple of people have asked that. The rules on limited companies are completely different, so we're literally only talking about sole traders here.
Got it. I'm not a limited company. I want to be an unlimited company. How do I do that, Emma? I have to sell more. That's what I need to do. Right. Anyway, right. So look, there's a bunch of questions that folks, what I'm going to do, I'm sort of choosing the questions that are in flow, that kind of make sense for where we're at in the conversation. I'm not losing them. So if we don't answer the questions in this bit, for example, I've seen the universal credit questions. I've seen a question about grants. I've seen like a couple of other questions. Like, we're going to circle back to those. I think the important bit is that we get the flow of the basics right first, because that's true for everybody, and then we can start looking at some of the the freaky bits around the outside, which is what I like to call that as of about 3 seconds ago. So Emma, what's your train of thought now? Where do you want us to head next, do you think?
So there's a few questions on training courses that have
Cool.
come up. What about a business course to help with business? I think if it's directly related to your business, that's fine. I think if it's a general business course to start a business, then that wouldn't be allowable, because it's not kind of a refresher course. They are quite strict on this area, and this is one of the areas that we get asked about a lot.
Come to a free course. Do you know any free courses that you could do?
Yeah. No, I've no idea, Simon. Let me know if you find one.
So just on that, Emma, I just saw lovely Eleanor's comment from the Kent Mafia, where Eleanor's from, talking about if you don't have a mortgage, then like, firstly, like, I salute you, and secondly, it's like there's no gains for you because you're not spending any money on it, so you can't claim anything back for something that you haven't spent any money out on. It just, like, you sort of going, damn it, I can't claim back from, like, is there any provision there, Emma, or am I
what you could do in that case, if you don't have a mortgage, you've still got bills and other things, so you could work out the percentage based on the bills and the council tax. Or there's alternatively a simplified expenses, where you work out how many hours you work from home a week, and then you can claim a fixed flat rate instead. And that makes it a bit simpler, but generally it's not as beneficial. Unless you don't have maybe a mortgage or you're not paying rent, you could just claim the flat rate instead if you don't have many expenses. Maybe you're at home, like with your parents or something, and you're not paying anything out, so you might just want to claim the simplified expenses route, and that's for like use of home, or you can also claim it for like travel as well. So it's worth looking into that. There should be a link on the government website if you kind of Google simplified expenses on there.
Good stuff.
I'll just also send our link to our kind of blog, where we talk about like sole trade expenses that you can claim, similar to the government one, but there might be a little bit more information on there as well, and it might be just a bit easier to kind of read through. So yeah, there's quite a few other questions. Someone's asked, what is a fixed flat rate? That's the simplified expenses flat rate that I mentioned, where you can claim a certain amount based on the number of hours you work from home. I'll try and find the link to that, because that might be helpful to people. Simon, I don't know if you've got any other questions at the moment that
Yeah, I have. I got about 11 questions, Emma, and I think there's lots of really good questions that are. Oops, my phone's trying to run away. So the one that jumped out at me. So lots of people that are on this call are perhaps in their first or second year of trading, or perhaps you're in your third or fourth year of trading, but you've not been able to get past, let's say, 15,000-20,000 pounds worth of income. And by the time you offset your expenses, you're actually coming in under the income tax threshold. So if the people that are on the call right now, Em, that are going, like, I think I need to do my tax return, but either I've made a loss or I haven't made that much money to need to pay tax anyway, we still need to do the forms though, right? How does that look at, like, and what does that look like in terms of the number threshold? Because we've not really talked about that in any detail for this tax year of, because I know it's changed and it's probably going to change again in April for 21-22. So the form that we're talking about filling in for the end of January, what's the income tax threshold where you pay 0% in income tax up to a certain number, but we do need to bear in mind national insurance as well. Like, what, give us a sense of that.
So if you've registered for self-assessment and you have a UTR number, then you'll need to do a tax return. So what I'd say is log on to your gateway and it will tell you whether you need to do one or not. But that is based on obviously your earnings for the year, as Simon said. So I would say, so basically if you earn under £1,000 of income, so sales, you don't actually need to do a tax return. However, anything over that, you will need to do a tax return, even if you aren't making much profit. So you still need to enter the details on the tax return. So as I'd say, it's probably safer to do a tax return when you start trading as a business. There's also a benefit to do it from the start, because even if in the first year you might be making a loss, and that loss can be carried forward to future years when you start making a profit, to reduce your tax in future years. So to me, it makes sense to just do a tax return as soon as you start your business and your sole trade, even if you're earning kind of very, very small amounts. So there are, if you earn under £1,000, then you don't need to do one, and that's sales. But anything over that, you really should be doing one. And yeah, that my advice is to do one as soon as you become a sole trader, because a lot of businesses do kind of make a loss in the first year or two, because there are a lot of costs, a lot of overheads. You might buy a lot of equipment relating to the business, and then that loss can be carried forward, and it will reduce your profit in future years, and reduce your tax bill in future years.
That's the thing about this stuff, isn't it? Like when you're telling your friends and you're telling your customers, you go like, I'm really profitable and things are going really well. When you're telling HMRC, you want the smallest profit figure that you can, within the rules that you can make in order to report the lowest number possible, right?
Yes.
And I think I was just looking at some of the other questions. The one about, I think it was Ian said about if you've got a job as a sole trader, if you're earning some money as an employee, you've already got an income. So therefore it's more likely that any income that you earn as a sole trader then becomes taxable. So if someone's got a job, but they've earned like 800 quid for the year in their side hustle, do you think it's still worth doing one, Em, or do they not need to do one? What's your sense?
So if they're earning £600, did you say?
Yeah, like £600 to £800. Like, let's say you're earning less than £1,000 in a side hustle and you've got a part-time job. Do we still need to do one?
You wouldn't need to do one if the money you're taking in is less than £1,000 a year, which is quite small. But yeah, that's £1,000 money in, not profit. So you wouldn't need to do one. If you do have over £1,000, then you would need to do one, and you would need to pay tax on anything over anything over any sole trade income, basically, because that £1,000 then just gets basically, if you've got £10,000 of income, then you'd have to put the £10,000 of income on, put your expenses on, and you'd pay tax on that. It's the same if you've got any rental property income. So if you have if you rent out a property, you get £1,000, potentially it's up to £1,000. You don't need to put it on there. If it's over £1,000, you need to be declaring that and paying tax on it.
Perfect. Okay, Emma, like, quick question. A slightly unfair question, so I'm gonna dilute it a little bit because I'm nice. Some would say this thing about should I do it myself? Should I get a bookkeeper? Should I get an accountant to do it for me? What's the sort of money, what's the price range that I could expect to pay if I'm going to get someone else to do it for me? And by the way, folks, because there's like 6 days to go, it's likely to be more expensive hiring someone this week than it will be if you had plenty of time. So like, what's your sense? Because my rule of thumb has always been, the more complex it is, then the more likely you'll need an accountant. But sole traders can often get a really good bookkeeper who's experienced that could do this for you. But I also would advocate do it yourself for the first couple, because you learn so much from doing it. And it's the discipline to get involved with the money stuff is what's going to set us all free. You know what I mean? What's your sense of that, price ranges, and how should we think about hiring somebody?
I'd say this late in the day, you'll struggle to get an accountant at the moment, as Simon said. But like, I think generally if you're starting out, I don't think you necessarily need one. I think maybe when you start paying tax, then an accountant might be able to save you tax. So potentially you might make some money back from having an accountant. It depends on your situation. Obviously, having an accountant is helpful because you can ask them lots of questions, and they if they're a good accountant, they will have a list of things, and they'll say you could be claiming for this, you could be claiming for that, you could be claiming for this. But if you're quite confident as a person in reading all the guidance and you like that kind of thing, then you might want to do it yourself. So I think it depends on the type of person you are. It also depends on how big your business is. So if you're a sole trader, you don't have to have an accountant. You can do it all yourself through self-assessment. When you start to earn a bit more, it might be worth going limited. I know there's quite a lot of people in the chat saying, is this about limiteds? It's this session is just for sole trades. But if you hit over 50,000, potentially it makes sense to go limited then. And that's when having an accountant really kind of does help and is probably necessary. But you get people, we have some sole traders who only earn kind of a lot less than that, and they still use an accountant because, one, it's less hassle for them. They don't have to kind of, we're chasing them all the time, and they can often we can often kind of put through expenses that they wouldn't necessarily have thought about. So a good accountant should save you tax. However, if you're under the personal allowance, as Simon mentioned, of about it's £12,570 for tax, then it might not be beneficial potentially, because we're not gonna be able to save you money, because it will just reduce your profit further, but you might not be able to save much tax because
that's a really good
you're
point.
not paying much tax.
That's a really good point. I think that's a personal decision that you go, like, if you've made 6 or 7 grand in the year, and you're not going to pay any income tax on that money, there's going to be a little bit of national insurance potentially on that sort of money. You're going to reduce the amount of cash that you have if you spend that money with a bookkeeper and accountant. But some of you might go, actually, that's worth the investment of like a couple of £100, because that means it's someone else that has to deal with it this time. But I think, bearing in mind that with 6 days, like Emma said, they're probably going to charge you more, and finding someone that's got the capacity, because they're super busy right now. So what we're going to do for the next bit.
Someone's asked about a price range. I didn't mention that.
Go on.
I would say some accountants charge, as Simon said, a few £100s, but some can be like, it depends on your business, but like £400, £500 roughly is some are sole traders. So I would say, some you might be able to get a cheaper deal, kind of £200 or £300, but are they going to do the same work really? It just depends. So that's what someone asked.
Look, I know that we're not going to dive into lots of detail on limited, but there's a few sort of headline things that we can cover very quickly, Em, if that's okay with you. Because I think the important one here, where we've got a bunch of folk that are a limited company, how does that play out when it comes to a tax return? So with a limited company, guys, if you've got a limited company, you're going to be paying corporation tax on all of your profit, not the first 12,570. Your tax bill will be on all of your profit at 19%, and that's reported back through Companies House, Em, right? Please stop me if I'm talking.
Yes, that's correct. Yeah.
Right. Okay. So that's that bit. But then if I'm an employed director of my limited company, or I've taken a dividend out of my limited company, either or.
Yeah.
Do I then also need to do this self-assessment, or can I just like go to the Maldives and just chill for a bit? Like, what do I have to do?
So you know my answer, and you're not going to like it, but yes, you still need to do a self-assessment.
You're no fun anymore.
I know. Was I ever any fun? The limited company is totally different to the sole trade, to your personal taxes. So the limited company does its own taxes. That's completely separate. Any money you take out of the company, salary, dividends, they have to go on your personal tax return, and you have to be taxed on them separately. So dividends, it depends on your earnings, but at the moment they're 7.5%. But then they're going up next year for the basic rate tax. Just be aware that if you do have a limited, any money you're taking out is either salary or dividends, and that has to go on your tax return based on the tax year you're taking it out as well, not your company year. So that's this is why limiteds are very complex, and
hire an accountant.
Don't recommend them until you're kind of at a certain level of earnings, really.
Yeah. Or my brother, who spends most of his life hanging out in spreadsheets. So I think, and I love him for that. Like, he rings me up and goes, like, this is really easy. What you talking about? So I guess like that's really cool, and I think that's really helpful. I think that's answered quite a lot of questions. I think there's a few limited company related things that people have sent me privately, as well as, by the way, don't post the questions privately. I won't always see them. So here's the bit then. So I guess just looking for the other questions that jumped out at me, Emma,
Yeah.
before we go on to the next bit. Any jump out at you so far? Is everyone all right, by the way?
So someone said, if I rented out my property, so there's a lot of questions about the property rental side of things. And they said, if I rent out my property for £10,000 for that tax year, I only need to declare £9,000. So what with the property it's a bit of a tricky one. So the £1,000 threshold I mentioned is just income. So if you're basically renting out your property and you're receiving less than £1,000, you don't need to put that on your tax return. However, if you receive over £1,000, then you should be declaring that income, and that calculation will need to be your income that you're getting in, less any allowable expenses. So like your management fees, maintenance, I don't know, things you pay for the property. And that will be the tax you'll pay profit on. Beautiful. If those expenses are lower than £1,000, what you can do is you can apply that £1,000 to it instead. So then the £10,000 would become the £9,000, and that would be taxable. However, when you enter that figure, there should be a box on the gateway to say, do you want to apply? It's called the rental allowance, I think it is. So it's £1,000 rental allowance or the trading allowance. So you just kind of say yes to that, and then it will apply the £1,000 rather than your expenses. However, it's likely your expenses are probably going to be more than £1,000 potentially if you're renting it out for £9,000. I'd have thought you'd have management fees, maybe ground rent, service charge, interest, that sort of thing. So that's to clarify that point.
Yeah, lovely. Thanks, Emma. Quick one for Farhana's iPad that seems to be able to post questions without Farhana being involved, which is very clever. Wix.com for websites, because that's a quick one. So there was a question, this is really interesting, about, I think it was, where is it going? Where's it going?
Someone saying, what if you retired? Yeah, sorry.
Go on.
What if you're retired but have a sole trader set up on the side? So yeah, you'd then need to do a tax return for that. If you're at retirement age, you don't need to pay national insurance. So that's one thing we haven't touched on. There's obviously tax and then there's national insurance. So that's one of the benefits of being of retirement age, but you still need to do a tax return and pay tax on it.
Beautiful. Paul, take a deep breath for me. And if you can sum up what you're confused about, please stick it in the chat, or we can unmute you and we can have a chat. That is what we aim to do. I think it's one of those things. There's so much information here, isn't there? That,
yeah,
you know...
I've got. There's a question from Paul that's just come up. He's saying he's had a part-time job, property income, freelance chef job. He's a busy guy. He's got lots on.
Similar question from somebody else. Corinne, I think, asked a similar question. Like
but this is about national insurance. Do you need to pay class 2 national insurance if your sole trading was less than £6,000? So actually, you wouldn't need to pay that because it's lower than the threshold. I think the top of my head, the threshold I think is £6,515 for the 21-22 tax year. So you wouldn't have to pay class 2 national insurance. However, you may want to voluntarily pay it, but in your situation, you're probably paying enough national insurance for your other jobs potentially. If you're working kind of for someone, you've got a part-time job. So because the benefit of paying class 2 national insurance when you're a sole trader is that it counts as a year towards your state pension. So you need a certain number of qualifying years to get your state pension. And class 2 national insurance is a cheaper way of paying it than class 3, which is where it's voluntary and you're not working at all. Whereas class 2 is when you're sole trader. So it's cheaper to do class 2 than class 3 if you want that to be a qualifying year for your pension.
Wow. Like, Emma, you're like Wikipedia for money.
No, I'm not.
I just want to pause for a sec, just a little check-in with everybody just to see where we've got to. So the process that we're going to do, folks, is this. Now I'm just going to break it down into steps, and some of you might have done this bit already, so bear with me. Right, step number 1 is you need to know how much money you've taken this year, or the 21-22 year, by the way. You need to know what that number is. That's just step 1. And if you don't know what that number is, You need to go back through all of the conversations that you might have had with customers and the invoices and the email confirmations. And, I tell you what, it's a quick one. I don't know what Emma will think about this. So let Emma just sort of look away or close your ears for a second. But one of the things that I found really useful was I logged into my bank account and downloaded a spreadsheet of the date range from the 6th of April to the 5th of April the following year. And then that gave me like a starting point of the money that came in and the money that came out. And then I kind of used it as a checklist. I went, right, where's that invoice? Where's that receipt? Where's that bit? And then I was able to sort of build out the evidence of what I'd made and so on. Now, by the end of this call, you'll go, I should really do this 1 hour a week, shouldn't I? Yes, you should. And so should I. Like if I do it, then you've got to do it too. That's what I'm going to commit to saying to all of you. But if you haven't done that yet, you haven't got into that system, that to me was a really useful way to get underway. Like I could, like in one place, I had all the money that came in, one place I had all the money that went out. Right. And then I could start to figure out, okay, so what's a legitimate business expense and how do I offset the two? Step one, what's the money that I've got in? Step two, what's everything, the entire list of everything that I can claim for from my business? And I can crunch that through a spreadsheet and then I've got the next, I'm ready for the next bit, if that makes sense. So once you've done the basics, you can then go, right, what have I missed? Let me have a look at that self-employment. What can I claim for link? And what else can I add to my list of expenses? And I'm going to pop the link in the chat once again. If I can find the right one.
I'm making a list of everything, all the kind of questions that are coming through. So I've got quite a lot of things to talk about. So
yeah, lovely. I'm just going to check in. I'll pop that link in there right now. There was a couple of questions about mileage. There was some questions about claiming for public transport. I'll do those ones right now. They're really easy. If you've been spending money on public transport in order to make your business happen, then you just need to keep the receipt as proof of the fact that you've made an expenditure, right? And that's really what it is. It's actually quite straightforward. If you've been using public transport in order to do your business, then that's a legitimate business expense, but keep a record of everything that you spend, right? And parking, yes, as well. If there's no receipt, and what do we do if we haven't got a receipt because we've lost it, or the printing machine at Rugby train station is about as useful as a
so yeah, this came up earlier today as well. I said so generally, if you're a sole trader, small sole trader, and you're not VAT registered, then if you're missing a receipt or two, it's not a massive deal, as long as you can kind of prove that you paid for it and you've got the bank line item. Ideally, you would keep all your receipts, because if HMRC come looking for your business kind of expenses, they'd like to see a bunch of receipts. You can keep them electronically if you want to. But yeah, this is it. Like if you're missing like the odd £20 parking or whatever it is, then, and it's small, then don't worry too much. Still include it if you can prove that you paid for it. Obviously, if it's a really big expense, so it's a few £100s, then you would really need to have a receipt for that, because yeah, you need to be able to prove where that came from. But luckily, most things are kind of online and electronic these days, so you can request receipts. But yeah, so hopefully that answers that.
Great. Vika's question, debit card receipts underground. If you're traveling around London, you can create an account here and put in your bank details, and it will pull in all of the receipts. So you'll have a record of everything that you've spent on underground and TFL services in one place.
Yeah.
So question from Paul, which was quite kind of specific about the difference between sole trader and property income, and if there is any. Can you help him answer
that? I haven't seen that question. I've been going down the questions and I've pulled out a few things to talk about.
Right, I'll find it and we'll come back
to that one if you want. So if someone's asked about COVID grants, yes, you do need to put those on your tax return. They are taxable income. They should go on the when you enter your sole trade income, it should ask you if you've had any grants, and you should put that on there. They're the SEISS grants that you got for kind of COVID. Any other grants are normally taxable as well, so you'll need to add those in. Travel costs, we kind of briefly touched on it. So there's someone who asked about mileage and parking, etc. So the general rule for a sole trade is that if you're traveling to somewhere that's a temporary workplace, it's not an office that you go to 5 days a week, then you can claim travel and any food costs as well associated with that. So you have to buy lunch out and about. However, they're quite strict on it. So if you are a sole trader and you're going to the same office week in, week out, then that would be classed as like a permanent workplace. So you wouldn't be able to claim travel for that. But if you're, I don't know, if you're going to meet clients in different locations and it's not always the same place, you've not got a permanent office, you're not a contractor for one company where you're going in every day, then you could claim the travel. If you are kind of going to the same place every day or every week, then you wouldn't be able to claim the travel, unfortunately. So that is a watch out. There's someone else who asked if they received their first income on the 8th of April 2022, do they need to do a tax return for end of January? No, we answered that at the start. We said that would fall into the next tax year, so that would be due next January 2024. Someone else said they did their tax return, but then they didn't put through all the expenses that we've just discussed. They said, can they resubmit it? You can actually do an amended tax return. I'm not sure if you can do that online, but you should be able to do it. You should be able to do it online. So try logging in and seeing if you can do an amended tax return. If not, you could do a paper tax return to amend that and send that in. Then we had someone ask about accounting apps, any kind of useful apps to track your expenditure and income. One that we're really recommending for all sole traders is Free Agent, and you can get that for free if you have a bank account with Metal, METTLE, and that is actually a free bank account and a free bit of software. So I would strongly recommend you set that up if you can. Some businesses are not eligible, it depends on the type, but it just makes your life a lot easier. You can invoice through it, you can track your income, you can put mileage claims through it, that sort of thing. So that's the one I'd recommend. Obviously you've probably heard of others like QuickBooks and Xero, but yeah, we find Free Agent the best for kind of sort of traders. I think someone asked about state pension years, how many qualifying years you need. I don't know 100%, but I think that's on the government website, so I can find it out. Yeah. Any other questions, Simon, that you have?
Yeah, I think there was one from Kate that Kate's asked a couple of times, and there was one from D. Williams about grants. I think you've sort of almost fully answered that, but I'm just to reiterate, grant income is taxable income.
Yes.
So there's a couple
the grants that I know of that should be taxable. There may be some caveats there, but again, it's a big topic. I understand that most grants are taxable. So if in doubt, just call up HMRC and check with them.
Great. Now, I think what I'm going to ask you about in a second is the process of filling in the actual boxes on the thing. So I think like the things that we're going through now, folks, like the whole point of this is so that when it comes to filling in the form, you've got all of the information that you need. So Emma, I've got a question about that. And we'll have a look at the form in a second and sort of roughly what it looks like. So theoretically then, let's say that we've made a list of everything that all the sales that we've made. We've done our best to figure out all of the expenses that we claim back for to reduce that profit figure as low as we can within the rules. Then the next step is we'll have a number from that, won't we? Which will be our kind of profit figure. And that's the number that we will need for filling in the HMRC form when we get to it. What's your thought about does national insurance get calculated automatically, or do we need to do that calculation before we get to the forms? Because I want to make sure that the whole process of when everyone's like logged in, they go, right, I've got my tax reference number, I'm ready to go. Like I've got the thing in front of me, I've got my pot of coffee and a croissant, because that's what I do to treat myself for these things. Like I'm ready to go. I want to make sure that everyone's got all of the information that they need to be able to fill in the boxes. And I think that was something that I was really keen for us to be able to get across from this. Do we need national insurance calculation as well as our income tax before, in order to be able to fill in the bits and pieces? That's my very long question.
The simple answer is no. It's all calculated for you.
Nice. I just did a quick screen share. Like, I don't know how up to date this particular one is. I think it's fairly close. So it is literally, and I think, like, folks, the bit that I wanted to get from this is, it's not the form, it's how we're thinking about the form that often prevents us from taking the action. And my best advice would be to eat the frog early, set an alarm, do it, wake up a little earlier, just get on with it. And I think the information that we're giving you now will mean that the actual numbers that you put in are straightforward, because you've done that hard work. Make sure that you've got your login ready, make sure that you've done your numbers, and then the thing is step by step. And it is actually quite easy when you get to it.
Yeah. I did also just send a link about, like, there's a link to kind of how to fill in your tax return, and it breaks it down by the boxes on the tax return, because quite a lot of people ask about the different things that go in it. So if you follow that link, it kind of tells you what to put in each box. So it does break it down quite nicely, I think. And it tells you about the trading income allowance that we mentioned. It tells you about a lot of it won't apply to you, but it does kind of, tells you what to put in terms of your personal details. Obviously, you need to put in any UK bank interest in there, but it tells you how to do that. Pensions, so any pensions that you receive. Tax reliefs, so if you pay into some pension schemes, you can get extra tax relief, but that's, again, not all pension schemes. So if you're just paying a normal salary sacrifice for your employment, you don't need to worry about putting that in. I think someone asked about pension contributions. Obviously, if you're paying into a personal pension, you might be able to get extra tax relief, so it tells you on that link where to put it. So gift aid.
Right.
So there's a whole load of stuff on that link just to say which boxes to put it in.
That's fantastic.
But it should be quite self-explanatory when you, I don't know if anyone, if you log into your gateway, it will ask you lots of questions, and then, it should just kind of guide you through it.
Great stuff. So quick pause for a second. The grant thing, just to wrap up the grant bit, that's basically, there's no separate box for it, is there? That just, you sort of take that into account with your income throughout that year, and that is just added to what your income figure is, right?
So there are different places to put it. Obviously,
sorry.
Without going through the tax return, we don't have an example on screen, but it says, it basically should ask you for the grant information if you're self-employed. If you received a coronavirus self-employment support scheme grant in the year, then you need to fill in the self-employment pages, and it kind of talks about where to put it.
Perfect. Well, every day's a school day. I learned something new there. I didn't think that was a separate thing. Right, so here we go then. The link that Emma's stuck in the chat, folks, is this one. And I have to say, like, the HMRC resources are so good now. I mean, I remember when I first started doing this, it was a disaster. But actually, there's a lot of very, easily laid out information that you can just, like, it even tells you what to do before you start. And that's one of the messages from today, folks, about doing your expenses, making sure that you know what your profit figure is first, getting these bits of paper that you need, so that when you're ready to start, you can just type in the boxes, and then hopefully it's a fairly rapid process. Now, Laurie put something about, there's an issue with her previous tax return that may have been lost, but she's got the PDF. Like, if you've got any anomalies where you go, I think I've submitted this previously, but they've lost it, or I'm not sure what to do next because my circumstances are different, you're just going to have to take the hit and get on the phone. And actually, if they want to help you folks, they'll be super busy at the moment. The office is open at 8 a.m. If it was me, I'd be setting an alarm for 7:56. So I've got enough time to get some coffee and then get on the phone and just eat the frog, get it done. And if there's anything that you're not sure about, use the helpline. That's what it's there for. They are super busy, but you can be smart about the times that you log in and do your best to get the answers that you need. I think they're trialing a text messaging service at the moment. So if your thing is straightforward, you might not actually need to speak to anyone. That information, according to the news article, is on the voicemail whilst you're on hold. Good.
Someone said,
Right.
are you 100% certain that if you earn less than £1,000, you don't need to do a tax return? If you've had income, so money received less than £1,000, yes. If your profit is less than £1,000, then you might still need to do one, right? So profit is different to the income that you're getting in, the sales that you're making. And then I think a few people asking about universal credit. So I'm just sending a link to all the benefits, state benefits, which are tax-free and which are taxable, because there is some confusion on that. And you can see on there, if you scroll down, universal credit is tax-free. So you don't pay any income tax on that. But obviously, if you do get any other allowances like carer's allowance, job seeker allowance, those are taxable. So those need to go on your tax return.
That's great. Yeah, thank you for answering that one. Yeah, the universal credit thing. The whole point of universal credit, folks, is that if you're on a lower income, the point of universal credit is to top up that income. The conversation with HMRC is a different one when it comes to UC versus personal tax. So the whole point of it is going, well, you're not earning a certain amount of money, so universal credit will top it up. That doesn't then become a taxable thing. That to me would be like, here's some money, and now we're going to take some of it back. It kind of doesn't make any sense, does it? So I think that treat that as a separate thing. You still need to tell your advisor, they need to know that you're earning money, because it might mean an adjustment is made to your claim, but that you don't need to report that stuff through the self-assessment process.
Yeah.
Kate's question, have you seen that one, Emma? I'm confused about the tax adjustments section. If your basis period is not the same as your accounting period, enter the adjustment needed to arrive at the profit or loss for the basis period. There's a question that Kate Stay has posted that I don't know if that's something that you can answer quickly or if we need to follow that up.
The basis, I don't think that applies. The basis period for for sole traders is where basically you're trading as a sole trader, but you're not, your year end is not the end of the tax year, which in your case, it doesn't apply because yours is the end of the tax year. So I would personally just ignore that adjustment section. If I were you, it only applies to people who've got different year ends, because as a sole trader, you can actually, or you used to be able to have a different year end. They are phasing that out. Hopefully that helps.
Perfect. Thank you. I'm going to answer the mileage question. I'm going to start answering the mileage question, and then you're going to tell me that what I've said isn't entirely correct. And actually, here's the real answer. But I'll do a start of a 10 to get us going. And then I was just going to invite Paul to jump on. And Paul, if you're still confused, do you just want to ask a question in a sec and do your best to put it in language that I'll understand as well as Emma, and then you're more likely to get a better service. Give me a second. So the mileage thing then. So if you're driving for your business, then it works in a slightly different way. Now, I'm still going to say keep your petrol receipts, but you don't claim the full amount of your petrol receipt back through your business. The petrol receipt is just evidence that you've put petrol in and you've spent money on fuel. You also need to make a record of the date, where you went from, where you went to, the reason that you did it, and the total mileage. Now the price point does vary a little bit. The rule of thumb depends like a little bit on what vehicle you're using, whether you've got any passengers, but Emma, I'm right in thinking that 45 pence per mile for the first 10,000 miles, which should be more than adequate for most people on this call, is the amount of money that you can claim back as a business expense from your business. Is that right?
You can actually do it either way, but so you can do it that way as you described, calculate the number of miles that you've done for business. And as we discussed, it was kind of, for any journeys where you're going to like a temporary place. So you calculate the number of miles, do 45p as Simon said, and then for the first 10,000 and claim that cost against your profit. Obviously that 45p, right, it includes, it's supposed to be for your fuel and your running costs of the car, because the fuel is calculated to be about 13 pence. Obviously it can vary, and the rest is like
Sorry, what?
your
That's
insurances,
hilarious, isn't it?
servicing, everything else. I know, they haven't changed this 45p for a long time apparently.
Sorry, do I drive a tuk-tuk?
Yeah.
Anyway, please keep going.
So that 45p is supposed to cover everything. So that's a simpler way of doing it. So any car expenses you wouldn't claim through the business, you just claim 45p times by the number of miles you've driven for business. However, you can do it the different way, but this different way, you need to keep a logbook of all your mileage like that you've done for the business and personal. And then you work out that as a percentage. So let's say you've done 500 business miles and 500 personal miles in the year. Obviously that's very low mileage, but let's just go with it. 1,000, that's a total 1,000, 50% business, 50% personal. Then you add up all of your running costs and your fuel for the whole year. And then you take 50% of those costs. So that's the harder way to do it, because it's just a bit more convoluted. It's easier just to claim 45p a mile. So most of our clients do that, and actually 45p generally is kind of a better outcome. It does depend on the car and etc. But you can do it either way. Once you've chosen one method, you have to stick with that for future years.
Right. Bit like marriage then. Right. Anyway, so here's what I'm going to do, folks. I'm just going to share my screen briefly, because when Emma says logbook for mileage, what I'm going to do is I'm just going to show you it just as an example. This was the spreadsheet that we shared, that Halima shared in the chat earlier on. So just as an example of the sort of things that this would, kind of help you. And this is the stuff that we've used for years. It's only as the business grew that we've started to get the fancy apps. Like something like this is more than adequate when you're a sole trader getting started. You keep a log of your mileage. So you type in the spreadsheet, and I'll share this file again. So you might go 25th of January 21, right? That's the date. And you went from the finest city in the UK, for example. Let me just adjust that a little bit. Sorry, no, Southampton. Sorry. So we go from Southampton to Northampton, and description, it's a meeting. And then the number of miles, like I tend to do this off of Google Maps. So I do a quick Google and go, what's the mileage between postcode 1 and postcode 2? And I could add a postcode in there. And then I have to take into account that I'm going back as well. So I'm driving to Northampton and back. So my total mileage, I'm making it up. It might be 175 or 175 miles. Our nice little spreadsheet here has already done the maths for you. So 45 pence times 175 would mean that you can claim for that particular trip £78.75 back from your business, so your profit figure, if that makes sense. So literally, for those of you that are a bit behind on making a list of all your expenses, this would be a case of going back through your diary and your calendars to go, right, what dates did I do business mileage? Just go through it one by one, and then at the end of it, you'll have a total mileage figure at the bottom of the record. So that's how we would do it, sole trader style, to get started. And then expenses, really similar. Like you'll notice, this is Henry built this. So you might go, I don't know, you bought a laptop. sorry, that's the date, isn't it? 25th of January 21. You spent money in curries and you spent 450 quid on a laptop for computing in it, fam, which is what my kids, this is the sort of language that they're teaching me at the moment. And then payment type, you might add, you know, credit card or whatever it might be. No, let's not do credit cards, let's do cash. And then once again, that thing would add up for you automatically, and then you'd have your total expenses. You can put all of your expenses on those lines, and then you'll have the numbers that you need. And that's the sort of stuff that has really helped me and helped us and helped lots of people. Good. 45p a mile, you're having a laugh. Sado, right. Just that quickly on a business bank account. You only need a business bank account if you're a limited company. That's the law. But you can, you know, terms and conditions of high street banks, they get grumpy if you run businesses through current accounts. But most people are setting up things like Revolut's, and Revolut has been great. Monzo I use, etc., etc. So let's just get Paul on, because I want to make sure that, Paul, you had a confused face for about 80% of this call. So just want to jump on and just check in if there's anything else that we can help you with at this moment, other than, yes, you're right, you probably need an accountant because yours isn't all that straightforward.
Hi guys, thank you. Yeah, so my question is a little bit confusing. I think I confused myself as well. During 21-22 tax year, I had a part-time job, which obviously got paid national insurance normally. And then during that time, I've got property income. And then I had like a financial coaching, which I did. And then I did like chef trading, private chefing events. So would your property income, would that be classed as a sole trader, or is that under your personal allowance? Or?
So yeah, property income is not sole trade income. So, but it's still taxed separately. So that would be taxed at your tax rate, or either 20% or 40%. But you don't pay national insurance on property income. You only pay national insurance on your trading income, your sole trade income.
Right, because that's where I got confused. Do I need to pay national insurance on my property income as well?
No.
Oh, that's good.
Cool.
That's it.
Happy days, Paul. You see, that was all right, wasn't it? That's just saved a load of money in that conversation.
And then like the sole trading with the two things I didn't like the bit of side hustle kind of things. I didn't earn over £6,000 with both of them combined. So do I not have to pay national insurance too on that then?
Yep, that's correct. Yeah, you don't have to pay national insurances on that.
Right. Even though I've earned, obviously.
You may have to pay some tax, but just not national insurance.
Yeah.
Yeah.
Okay. All right, thank you.
Beers are on you then, Paul. You had more money than you thought you did, mate. You're welcome.
Yeah, let me know.
Yeah, that's right. Is it my round or your round? It's probably your round. It must be your round.
My round.
So someone's asking the chat about the difference between NI and tax. So maybe we'll just clarify that.
Let's do that. Thanks, Paul.
Yeah.
Brilliant.
Thank you very much.
So national insurance is, so tax is a separate thing to national insurance. When HMRC calculate your tax, they look at your personal allowance, which is your tax-free amount of £12,570 a year, and anything above that you pay 20% tax on, up to 50,270. So, and then above that is 40%, and then you get into the higher rates. So that's the tax. National insurance is a separate tax, and it's got different thresholds just to be more confusing. And as a sole trader, you pay class 2, which is it's about £3 a week. So I think it's £3.05 a week randomly. If your earnings are over that threshold that we mentioned, the 6,500. And then class 4, when your earnings get a bit higher, you pay class 4, which is 9%, I believe, over. I haven't got the exact thresholds here, but they're all available online. It's about £9,000 or £10,000. It goes up there. So you pay class 2 and class 4 national insurance as a sole trader. You don't pay national insurance on property income, as we discussed, or interest or dividends. It's literally just on sole trade income. And you'll pay national insurance if you're employed as well, but that will all be deducted through your pay slip as an employer. So hopefully that clears that up.
Thanks, Emma. For those of you that don't have the Microsoft software, you can upload that template into Google Drive and then open it using Google Sheets if you haven't got the software to do it. So you just need a Google account to be able to do that. And there are other apps that you can use, web apps, to open Microsoft spreadsheets. Cool. Okay, so we've got literally 3 minutes left, and I guess like the thing that went through my mind is, does anyone have any burning questions that we haven't answered that you think you can stick in the chat now? We'll pick the best ones. And I just wanted to thank Halima from the Rebel team for organising this. This was her idea to do. And I think it's fair to say that the information that you've got tonight is from Emma in particular, less so from me. Talk to me about marketing, like I'm better at that. It's been absolutely golden. And I hope we've given you enough to have the confidence to do what you need to do next. Now, remember, if you've signed up to a Rebel course, then you've been able to join the Rebel Business Support Group. We do have courses running at the moment. Check out the Rebel School website if you've not been to one of our programs and you need a bit of help. The session tonight was about just really sharing with you guys that you're not alone, and having the courage and confidence to get on and eat the frog first thing tomorrow morning. Frogs are best consumed first thing in the morning, right? And hopefully this has given you the nudge that you needed, and a bit of information, exploded some of the myths, and pointed you to a place where there is some extra help, either from Emma's blog at Millward May or from the HMRC website and so on. There's only been about 23 questions coming. So
there's a few questions coming. So Kate's asked, if I cover travel expenses for costs incurred as part of freelance employment, whose expense is it? Me as a sole trader or my employer? It's your cost. So if you're covering the costs incurred, then that's your cost. So you can put that as an expense. So yeah, hopefully that's answered that. How do we claim back? So Franz asked, how do we claim back tax on pension contributions between low and higher rate tax? Only 20% is the default paid back by the government, and we have to claim the rest. Yes. So if you're a higher rate taxpayer, and you've made personal pension contributions, this doesn't include kind of salary sacrifice pension contributions for your employer, so you have to be careful there. Then there is a box to claim that back on the tax return. So if you go to that how to fill in a tax return link that I sent, it's got a section there on personal contributions that had tax relief in the scheme, and then it just explains their kind of examples and the boxes to put that in. And then how long should I keep my receipts for? As a sole trader, I think it's 5 years that you have to keep your receipts for. Do we combine income from separate self-employment or treat it separately? So yeah, this was a question that came up before. You can actually, the gateway will let you enter in different self-employments if you want to separate them out, or you can just combine it as yourself. Self-employment. It won't really make a difference in terms of the tax because they all come under the self-employment. They all get grouped up, and if it's over the thresholds, then that's when you pay the tax. How do you claim for business loan? A business loan is not a cost of the business. It's money that you've borrowed, so that wouldn't be a cost associated with the business. You couldn't claim the loan. You could claim any interest on the loan though that you've paid. If I haven't received my UTR by the deadline, will I be fined? Potentially. So this was something that came up on the first call in the morning, where you have to have actually registered. I think the deadline was the 5th of October. The 5th of October 2022 was when you had to have registered for self-assessment. There has been a delay with HMRC, so I think a lot of people have registered before then but not received their UTR. So my advice would be to give them a call on the HMRC self-assessment helpline, and then see where your UTR is, and just make sure they've got that on file so that you don't get fined. If you did sign up after that deadline date and you haven't received your UTR, you could still try and chase them, but obviously you didn't sign up before the deadline, so that is an issue. Potentially you could be fined for that. If they're nice, they'll kind of try and give you a UTR sooner. but it's tricky because obviously with the Royal Mail issues as well, I think a lot have got lost in the post.
If it was me, I'd be getting on the phone.
Yes, I would personally as well. Even
yeah,
the wait times are like an hour or so sometimes, but it's still worth just having it on hold and just waiting.
At least you've taken reasonable steps to try and resolve it, and that can help be a little bit of mitigation to say, hey, don't find me because I've tried really hard.
Exactly.
So unique tax reference is what we're talking about, UTR, not a silly question at all, Paul. And then just to confirm the universal credit thing, that's not income from your business. That's what the government give you extra to top up the fact that you're on low income. So you're only reporting on your self-employment income without the UC as part of it, because the UC is what happens as a result of the amount of money that you're making in your business. Okay, and I hopefully, and thank you, Kerry, for supporting with that one. So I think we'll probably pause it there, Emma. I think I just wanted to say thank you so much for sharing your knowledge and certainty. And then whilst there are times when like my eyes go cross-eyed on the inside of my head and the outside, especially around national insurance, that was always the thing that I found tricky to get my head around. We've shared the links with you. And as Halima has said kindly, as part of the Rebel Plus, which is the support program that we offer to every single person that comes through the Rebel School in whatever way, shape or form, the recordings are going to be shared with you. So if you needed to go back over some of this stuff again and have us on in the background like Radio 4 whilst you type in your tax return information, maybe that'll give you what you need to get it over the line. Great. So look, thank you so much to those that sent the email that I asked you to send. I've received those emails. Thank you from the bottom of my heart for that. And I will send you a personal reply as to what we're going to do with that, and just to say thank you for that. Hopefully you've got everything that you need from this. Halima and Ewan from the Rebel team, thank you for making this happen. And Emma, what a legend you are. I suppose lunch is on me now, isn't it?
Lunch and the rest of it. So.
Have a lovely rest.
Yeah.
Thank you so much.
Nice to see you all, and
yeah, great to see everybody. Thanks again. I hope you got what you needed. Let us know in the Facebook support group if you need anything else. Thanks so much. Take care, everyone.
Thanks. Bye.